Welcome back to another episode of Around the Markets with Mr. Peter McGuire. Pete, what's been happening at xm.com over the last 2 weeks? And I care specifically about the weekend's news flowing into this week. Talk to me.
Well, good morning, Will. I think a couple of things really hit us between the eyes. The softness as far as those non-farm payrolls that came out on Friday evening, New York time.
Yeah, what was the story there, mate? They disappointed like you wouldn't believe, and they didn't even go close to their numbers.
Absolutely. They underwhelmed. We were looking at an average at about 530,000 each month since the start of the year. Consensus was about 500,000 and it underwhelmed with 194,000. So really that demonstrated the softness as far as that job market, where that plays naturally leading into the end of the year. And you've got taper talks next month and what's happening there. You've got stagflation worries, energy prices at record highs. You had a big decline in government jobs. I've made notes of that. Decline in nursing, and that's not a good thing for the healthcare sector. Local government education, so they were where you pulled back jobs. Leisure and hospitality, Will, that was really one thing that you would have thought possibly you may have seen a re-engagement as far as dining and, of course, traveling or just enjoying a little bit because it's a big nation. And I mean, people crisscrossing the nation. So that's had an impact, and as well, the retail sector. So they're not the numbers that we really wanted, and that's really demonstrated structural softness, and that's not a good thing.
Well, structural softness going into this period is not that great. I mean, we've seen panicking around energy. There's a bit of a crisis. Looks like we've got some issues with Russia and Europe. We've also got stock markets coming back, swinging into the FX complex. Where's the relief? What's the mighty dollar doing? And what's holding us up?
Well, it's boom. King dollar has just had a wonderful move to the upside, and that's been really very, very strongly engaging from a currency trader's perspective. You've seen softness or real softness across in the last matter of a week. Yen, euro, certainly the pound. All of these factors have created, I think, a lot of opportunity for traders. And where we're looking at the moment, you've seen that possible bid up in 22 as far as a rate rise. The story I'm not happy with, and no one is, as far as the stagflation, in other words, very soft or even to the point of no growth, and you've got inflation off the charts.
Inflation off the charts is interesting. Hey, jump onto this chart. We're taking a look at these energy fears. Why are we thanking Putin here? And look, if this is a much bigger problem for Europe and Asia, why is America shielded?
Well, why you're thanking Putin is because of the gas issue and what they're exporting naturally into the Eurozone. You're coming into winter. You've got the prices you can see there for coal has been one-way traffic, absolutely parabolic. And that storyline since June or July, Will, has been just a trader's delight. If you've been a coal producer, that's extraordinary. China, they're the largest producer and the largest consumer by a country mile. And they're now saying they need to increase their production numbers to meet their electricity demands across the. And
give me the snapshot. Why is America shielded? Is it because they actually have plenty of natural gas and coal to keep things running?
Yeah, and remembering that they were very the biggest energy producer in the world going back to 18 or 19 under the Trump administration, and what they did with oil and the shale side of things. So there were the three titans were at the table in no particular order: Russia, Saudi Arabia, or America, all vying for huge output as far as crude oil. So from an argumentative point of view, the world is re-engaging with consumption, but there are laggards or issues that are going to greatly impact from a supply side, and coal's been one of them. As you can see, India, have a look what's happening across all of these big emerging markets, and the electricity demand is really, I think, taking everyone by surprise, though it really shouldn't be, because this decade is going to be one that electricity consumption is going to really knock us out of the ballpark.
And that's a fair call. I mean, I think there's plenty of conversation that anybody can read across any of the major mastheads, Bloomberg, the Financial Times, pick the Australian Financial Review in Australia, pick the China Daily, whatever, talking about sustainable options. But let's face it, they're still on the drawing board. They're coming in. They're a long way from production. Exactly. You know, I think we need to maintain some practicality around what heats and cools and powers, you know, smart cities today. Now, jumping quickly into this next chart, mate. There's a serious issue in I guess global supply chains. We've spoken a little bit about elements of it, but if we think about global supply chains and what they are, you know, in really simple, very simple terms, you know, materials are produced somewhere, products are created somewhere else. Materials are shipped to, you know, production environments then shipped to markets. The common element here is that bulk movement is sea freight.
Absolutely.
So there's plenty of
the cost there with that Baltic, and the cost there in that yellow graph, Baltic Dry Freight Index, Baltic Sea, everything coming from Germany and Europe, and then, you know, crisscrossing the world. That really has just been extraordinary cost. That's got to be added on to the cost of goods, as you know. If it used to cost $50 to get an item here, and now it costs $90, that's going to go into the cost of it. So that's the inflation, and there's the realization that I don't know where the end game is. All of those higher energy costs to run the ship, instead of $10 a barrel of oil, it's now $85 a barrel. Yeah, really impacts.
Fuel prices, storage, labour. I'm sure even dockside. One of the key stories that popped up last week that I noted was that the increased demand on shipping, therefore the increased, if you like, utilisation of ports and port infrastructure, and effectively this click and collect demand that's spun up through COVID. Has much of the supply chain under pressure, not only from its ability to actually, you know, dock and unload and transport, but actually the maintenance of these facilities. So we actually may well be in a situation where we see further increase in cost and delay in unloading of goods. Yep,
that's exactly right, and they're saying that on the west coast of America. It's just there again issues as far as supply chains. So I think it's going to be it could be a very interesting couple of months, Will, ahead of us.
Supply chains, energy, and we spoke a bit about the
logistics,
the mighty dollar. If we jump finally into property for a moment, big story flowing out of China. Everybody's across it by now. We sort of, the chart on screen's talking about a stagflation. A light risk. I think it's fair to say that majority of people wouldn't necessarily understand the risk. You know, we've got a property company that's not quite meeting its obligations in China. We're seeing, if you like, news headlines pop up quietly from time to time talking about debt repayment that's not happening. What does it actually mean? I mean, is this a choice by perhaps government to not bail this company out? Is this company actually just choosing not to pay its debts? You know, what does it mean?
Well, I'll answer the second one first. As far as not wanting to pay their debts, I don't know whether they can pay their debts. I don't believe they've got the actual firepower to write the check and say that's that bond payment. So there's the first part. The second part is, we all understand that they're building 600,000 homes a year, the Evergrande property group. So if they allow the bankruptcy to happen, as you know, it just cleans out the whole system, but that's about a complete collapse. And, you know, does that wear well or bode well for other companies naturally across that China basin? How many other Evergrandes are out there? Could this be a start of a systemic issue to not only to the lenders, but what impact it has to global confidence and that contagion effect? So there's the first point. The second one is, if their governments step in like they did in Lehman Brothers and mirror image that what the Fed did in 2008-9, then you just keep on writing a check too big to fail and thank you very much, and you know, you monetize the problem. And the third way out, I read something over the weekend which was quite interesting. Maybe not what central bankers would want, but this could be the way for China to certainly bulletproof itself. It's the largest gold holder in the world, as we know, and maybe they could mark the price of gold up. So currently sitting at 1,800, say, mark it up to 5,000, and you naturally would clean your balance sheet, have a great impact as far as currencies. But who's to say, they're just, different ways and different mechanisms that central banks can operate, or, think outside the square.
Okay, so you should say that it's
a scenario.
There's a number of scenarios that still may well be coming down the pipe, Pete, and we should stand by and keep a weather eye on it.
Yeah, absolutely. And that creates, again, Will, that volatility.
All right, fast minute, Pete. What should traders be looking for? What are the signals that they should be picking this week to as we sort of flow from what are we at? We're at Tuesday morning here in Australia. So another couple of days of trading. Talk us through it.
Well, I think the realisation is that you've seen Brent and WTI, rocket up over the last 12 hours as far as price. So you have to say, how much more firepower is there into that crude price? It's been one-way traffic for the last 6 or 8 weeks. We had those lows of 60, now we're at 85. So that's not a bad trade. And we've been adding to it each week saying, look, keep an eye on it. Energy prices, and we made reference to that, heating oil, natural gas, you saw coal prices. So those base metals, aluminium's very, very strong. I think you're now at 2008 levels. Keep an eye on that US dollar, currencies naturally, and then you've got earnings seasons coming out of the US, and companies just reporting. You've got CPI numbers this week. You've got retail sales, and a big data, a swathe of data coming through. So keep your hands on the wheel, and as they say, don't marry a trade.
Peter McGuire, that's a wrap. Speak to you next week.
Thank you, Will. Take care.
Speak soon.